What's up, guys? It's Rob here, and today we need to talk about two stocks that are pumping up massively and that could be getting a lot of investors into a whole bunch of trouble. These two stocks, ticker symbols HKD and AMTD, have gotten very popular over the past week, have been pumping up huge, but could also be scamming a bunch of people potentially. We're going to talk about what's going on with these stocks, how they've pumped up, and why they might actually be scams, why they might be falling rather soon. Now, we're going to start off looking at the charts just to explain what's gone on with these stocks. HKD and AMTD, both of these IPO'd recently. You can see they are ADRs, so American Depository Shares. They're not American companies, but you can see that over the past 2 weeks, just about, ticker symbol HKD is up about 11,000%, or at least it was a couple minutes ago. Now it's up about 8,000%, and it's just been soaring. It was around a price of $14 just about 2 weeks ago. Now it's at a price of $1,800 per share. These stocks are pumping up huge. AMTD also was at a low of about $1 per share 2 weeks ago. Now it's at $8.41. So let's explain what's going on with these stocks. First of all, they're getting a ton of attention on social media sites. On StockTwits, they're the number 1 and 2 top trending stocks and the number 1 and 3 most active stocks. On Google, a ton of people are searching for these stocks, ticker symbols AMTD and HKD. A ton of people are looking into these, and they just IPO'd recently on the New York Stock Exchange. Now, when ticker symbol HKD first IPO'd just a little bit less than a month ago, its market capitalization was $1.4 billion. Since then, its market capitalization, if you look at Yahoo Finance, has gone up to $370 billion. Now, a lot of people are saying that this thing's going to double, it's going to triple. When you get up to a market cap that high of $370 billion, it's very tough to get the stock price to move significantly. Now, what's actually going on with these stocks, if you'll look at what just happened when they IPO'd, they took 16 million ADR shares public, all right, at a price of $7.80. So it's up a couple hundred times that price to where they're currently at, where they're close to $1,800 per share. And to our knowledge, there are no material circumstances, events, nor other matters relating to our company's business and operating activities since the IPO date. So nothing materially has changed with the company. This is just a phenomenon of trading. This is just a bunch of volume going into these stocks for no material reason, right? People are just seeing volume and pumping more and more volume into these stocks, actually pumping them up in price. Ticker symbol HKD is actually seeing extraordinarily low volume now that its stock price has risen so dramatically. We're only seeing every 30 minutes a couple thousand shares trading hands. About this last 30-minute cycle, about 1,600. But the key thing to take away from this is that this stock, this ticker symbol, is still undergoing our initial stabilization period, meaning that the underwriters have been granted a green shoe option exercisable within 30 days from the date of the final prospectus to purchase an aggregate of 2.4 million additional shares at the public offering price, meaning that there are potentially 2.4 million shares that could be bought for $7.80 per share by the underwriters. And then it would seem pretty smart if they bought those shares and then sold them at a price of $1,800 per share. That would be a pretty good flip, a pretty good turnaround on those shares. So I, in my personal opinion, would be steering clear of these stocks. While there was a lot of volatility, a lot of momentum that could have been gained over the past couple of days, when you see the stock's market cap reaching $370 billion for ticker symbol HKD, it's probably the point at which I would want to turn away. I'm not too interested in trading either of these ticker symbols. It seems like the kind of situation where people are probably going to lose a lot of money. Now, that's not a guarantee. That's not financial advice. That's just my opinion on the situation, just doing a little bit of research into what's going on with these. Unfortunately, there are no material reasons for these stocks to be pumping up, and we do see that there are potentially 2.4 million additional shares that could instantly be gained by these underwriters and then sold onto the market, potentially crashing the stock price. You can see earlier we were at a price of $2,500 per share, and we've already fallen to $1,800. So I, in my personal opinion, would be steering clear of these stocks, watching out for them. That's just my opinion, though, not financial advice. Obviously, it's your money. You guys can do whatever you want. And other than that, guys, that was just a quick update. We're not doing a quote at the end of this video like we normally do, but if you want to see more of this kind of content, feel free to subscribe to the channel. And other than that, guys, I hope you have a great rest of your day. Trade safely, all right? Watch out for these two. It's up to you what you want to do with them, but be safe out there. I'll see you in the next one. Bye.